The implication is very clear, colleagues. Trade compliance is no longer a back office function. It is a strategy, capacity at the core of the supply chain governance systems. Let me allude to the fact that we are now required to address far more complex questions. Some of the questions which our esteemed panelists would be able to dwell on today. Who are we sourcing from? And who ultimately owns them? Where are our goods coming and through which jurisdictions? Are we exposed to sanctions entities, restricted technologies, or controlled destinations? At the same time, regulatory expectations are tightening. Enforcement is becoming more sophisticated, and the cost of non-compliance, financial, operational, and reputational, is rising significantly. So the discussion that we'll be having today is not simply about compliance. However, it is about readiness in a world where trade, risk, and governance are deeply interconnected. We are privileged to have experts who spans global trade policy, supply chain leadership, institutional governance, and capacity development. We have with us Dr. Obiora Madu. We have Dr. Albert Njamen. We have Danilo Desiderio, who are going to share executive insights into these issues. And what makes today's discussion particularly important is that we have diverse networks that are here that are joining us. We will begin this session by me introducing the speaker. To ensure we have a smooth discussion, I'm going to introduce high-level profile of the speakers as we move along. But firstly, it will be important that we look into some of the housekeeping rules. We encourage you to ensure that you are muted. Please remain muted throughout our engagement. You could be able to post comments or suggestions in the chat platform. And after the deliberations, we're going to have room for an interactive sessions. We're going to try as much as possible to be mindful of time, because we know how important it is to engage with the audience. As you listen carefully, we want you to write down or jot down some of the important contributions, comment, questions that you would like to put forth and you would like it to be answered. This platform, we believe that is an African platform, is a global platform, and it's for everybody. And we're calling on you, if you have any contributions, please feel free to do so. So now I'm going to introduce our first speaker, who is our esteemed Dr. Obiora Madu. He is indeed a transformative figure in Africa, international, and global trade. With over 37 years of experience, he has made remarkable and transformative contributions to the space of supply chain management. He is the visionary behind the Africa Center for Supply Chain and the founder and CEO of Multimiles Group. Dr. Madu has significant influence in the space of supply chain management in Africa and globally. In 2014, the National Productive Order of Merit was awarded to him by the President of Nigeria. Dr. Madu holds a doctorate in business administration, University, Switzerland, and is an adjunct professor at the Malaysia University of Science and Technology. His international certifications include being Speaker, Dr. Madu. Over to you, Dr. Madu. You can share your screen. Thank you.
Well, it's still the same good morning, good afternoon, and good evening, depending on where you are coming in from. Thank you, Prof. During the introduction, Prof said something about supply chain changing. The first thing to talk about is actually how important is supply chain. It's critical. Competitiveness of nations, how nations' economy works, how companies succeed. Once your opponent or competitor is able to manage his supply chain better than your own, he gets a competitive advantage. That's a general, but let me share my slide. All right, so from what Professor Ambe said, the supply chain that we designed before that worked is no longer working right now. So we have to look at how do we design a trade-ready supply chain. We have supply chains across everywhere, but is your supply chain trade-ready? And not just being trade-ready, it's also in a sanctions-sensitive environment. When your country is not sanctioned, you can say it doesn't concern you, but the issue is that you will be affected in a lot of ways through your suppliers and other partners in business. So let's go. I have already mentioned how important supply chain is to every nation and every organization. In fact, we say, I belong to the school of thought that says that the success of African continental free trade area will depend on logistics and supply chain. Now, why does this matter now? Reason number one, intensifying global sanctions and export controls from America, from EU, from UK, and Asian regulators. Because in the international trade, you obey the laws of your own country. You also obey the laws of the country to which you are importing or exporting. So this is one of the reasons why it's important. The laws are made elsewhere, but you are affected. Then the other thing is rising regulatory scrutiny on cross-border trade. Now you have AI-driven customs screening, advanced cargo data requirement, and a whole lot of other things. So this is why your supply chain has to be trade ready. Africa's expanding role in global supply chains Ordinarily, Africa is about 20% of the world population, but Africa's contribution to global trade is put at between 5 and 6%. And yet we have almost all the natural resources in Africa. Something is wrong. The culprit is supply chain. So, and for Africa to play a greater role in African global supply chain, we have to do something about it. After implementation, it will increase intra-African trade. Of course, we know the history behind intra-African trade. Today, it's put at between 12 and 15%. In Asia, it's about 50. Europe is about 60. So it means we have a long way to go. Geopolitical volatility disrupting traditional routes. We all are familiar with the story about the Strait of Hormuz. In fact, there's an article, I think, on LinkedIn today. The person said that where ships decide nations. So the volatility seems to have come to stay. So the earlier we redesign our supply chain, the better. Now, sanctions, when we say sanction-sensitive environment, for you to have a sanction-sensitive supply chain, there are things you look at. First one, trade partners may be targeted or indirectly targeted. If a bomb drops on the factory of your supplier, you have a problem. If another country sanctions the nation of your supplier, you could be affected. You remember what happened with Trumpism. First of all, he had a tariff for some nations, then he had another tariff for nations who are dealing with nations that are under sanction. So these are the kind of things we should be looking at. Banks enforce strict money laundering and KYC and transaction screening. So if your supply chain is not sensitive, you are going to have a problem with banks. There are export controls which apply to specific technologies or materials. You have to build all of that into your supply chain. Then documentation, origin, and end-use verification are also critical. The rules of origin apply in every bilateral agreement, even continental one, which we have in Africa. And then documentation is the key. Documentation is the key. If you have not documented, even if you document it and you can't retrieve it, you are lying because the other party cannot accept. So now let's look at strategic supply chain configuration for this sanction-sensitive environment we're talking about. First of all, it has to be modular. Modular in the sense that you can switch markets, you can switch suppliers, you can switch routes without rebuilding your entire supply chain. That's the first thing that you have to do. The second one is that redundancy. Redundancy can be seen as waste of resources and the rest of them, but there are circumstances where it is something that you must do. Multiply pre-qualified suppliers, parallel logistics lanes, and backup banking corridors. If you depend only in one source, the question is actually how quickly can you switch from your main source of supply to others in 30 days? If you're not able to answer that question, there's a problem. Then transparency. Full tier 1 to 3 visibility. Some companies have suppliers, first tier, second tier, and third tier. So if you have only visibility of the first tier, you have a problem. You have to have visibility through the 3 of them. You must be able to trace every component, input, and financial flow to its origin, or else you start answering questions of what you do not know. Then data-driven, automated compliance checks embedded into procurement, logistics, and payment workflows will save you a whole lot of problems. Right now, we have automated compliance technologies that can help. Then regulator ready. Is your company ready for the regulator to walk in and audit you? Audit-proof documentation, pre-validated export classifications, beneficial ownership records. All these things are very, very important. So strategic supply chain configuration is MRTDRR. That is to say, modular, redundant, transparent, data-driven, and regulator-ready. Let's move to designing the right configurations, the things that you must have. Cross-border screening of your partners. You have to ensure that that happens. Dual route logistics planning. This is not easy. When vessels are unable to enter the Suez Canal, the only option is to come down to the Cape of Good Hope. And the implications financially is very, very heavy, from insurance to fuel and everything. Second one here is dual routing logistics plan, regional sourcing option. During COVID, so many companies suffered as a result of the concentration of their suppliers being in China. After that, I think companies learned that dual sourcing is the way to go. And I think it is also becoming very, very important at this point in time. Then, of course, counterparty and transaction monitoring. Screen at onboarding is not enough. If a supplier supplies you 350 times, you should check the supplier 350 times. That's why the customs say, in God we trust. Everyone else we investigate. You should just behave like the customs here. Export controls. We do not have too much of export controls in Africa. I think we are yet to export enough. So but African firms need to watch certain things that are happening in the export control world. There's what they call the dual use materials, products with both civilian and material application, chemicals and industrial inputs, then technology transfers. I had a situation when I was approached to find out what can be done. The Navy wanted to take the engine of one of the vessels out of the country. Of course, it is to repair it and bring it back to Nigeria. So you need carnet for such transactions. So high-risk regions and sensitive entities, you need to watch very, very closely to those ones. Then end-use certification and documentation integrity must be obtained, stored, and periodically renewed for all controlled export. The key word there is controlled export, because I know that even in African nations, there are certain exports that you cannot make unless you obtain certain approvals and licenses. All right. African Continental Free Trade Area in a global compliance environment. There is the rules of origin rigor, coexistence of national, regional, and global regulations. The thing about compliance is that after needs compliance, just as much as the global market needs, there's no lowering down compliance level because it is an African transaction. It's all at the same level. Issues of tariff preferences, documentation accuracy, it is the same thing globally. Custom modernization and digital transparency. These are all the things that AFTA need to do to ensure that things work, because it's keyed into the global value chain. Then institutional readiness for cross-border scrutiny, clear governance for trade compliance. I happen to have taken so many companies, I run training for so many companies in terms of trade compliance. And it's very funny how unserious people take it until you face the consequences. So clear governance for trade compliance you have. You have to have policy and SOP aligned with international regimes, all those issues that you have to comply to. Then skilled compliance officers. You have to train officers. At times, the presence of evidence of compliance by a company can save a company when issues are taken to court. When a company says, I have a compliance manual, here is my compliance officer, definitely the judge will put all that into consideration before meting out penalties. Technology for screening, monitoring, and reporting. You have to have that. Escalation protocols for high-risk transactions. In fact, some high-risk areas are treated as critical control points that you have to have people who are looking at that very particular point every time. If by the time you get this slide, each of the things that have been discussed, if you look on the right side, you will find very useful information about it. Compliance by design. Compliance doesn't just happen. You must design it into the entire supply chain. You will design it into procurement. You will design it into production. You will design it into logistics. You will design it into finance and also documentation. Because at every point that we have mentioned, non-compliance has consequences. I don't have time to go into taking all the procurement, production, logistics, and the rest of them one by one. But the fact is that whichever section of the supply chain you belong, take a look at it, and you can always identify areas of compliance that must happen. So if you want to have a trade-ready supply chain, you must build in compliance by design, not by accident, not when it happens. I'm trying to round up. Building resilience to geopolitical volatility. Now that we said that geopolitical volatility seems to have come to stay, so what do? To build resilience, alternative sourcing basis you have to create, real-time risk intelligence, then strong regional partnership under AFTA. In fact, one thing what is happening geopolitically will do for AFTA is that it gives room for stronger partnerships and relationships along the African Continental Free Trade Area. Then flexible routing and shipping reconfiguration. This is not an easy one because you don't own ships, but the fact is that something can always be done about it. Inventory buffers for critical inputs. Yes, if you know that the environment internationally is challenging, you have to build buffers for your very critical inputs. Tools and enablers for trade-ready supply chain, digital compliance, AI-enabled sanction screening, supplier risk scoring. This is very important. This supplier risk scoring, AI will score the supplier, including everything ESG, just give you a report with which you can take a decision. Pre-clearance partnerships with customs, end-to-end traceability systems, then of course scenario modeling and stress testing. These are all the things the tools that you must use. So I'm going to end with these questions. Executive question that should guide action. Every executive in supply chain, particularly those at executive level, heads of supply chain or heads of different aspects of supply chain, where are our sanction-sensitive nodes? Do you know where they are? Can you name the specific suppliers, corridors, and counterparts carrying elevated exposure? This is very important. Secondly, how many suppliers can we switch to within 30 days? That's where the redundancy comes in. They are not doing anything. You probably will be paying them something to keep them. But the fact is that when the push comes to shove, then you will see what role they are playing. Are all cross-border partners fully screened? Not just at onboarding stage, continuously. Do we have real-time visibility of our supply flows, complete visibility? Is our documentation strong enough for regulatory audit? Are you ready for regulatory bodies to come in at every point in time to look at what you are doing? So every board member and senior leader should be able to answer these questions clearly, immediately, and with evidence. So the 2026 compliance mandates: resilient by design, transparent end-to-end, digitally enabled, aligned with African Continental Free Trade Agreement, ready for regulatory screening at any point in time. Compliance is no longer a function, it is strategic capability. I think I want to end it here, and thank you very much for the time. I hope it was useful. Thank you very much. I'm going to stop sharing.
Thank you so much, Dr. Madu. Indeed, you have demonstrated your profound contributions that you've been making, and just to let the insight, which you've been able to give on a high level, you've articulated strongly on the fact that the success of AFTA would depend, on logistics and supply chain, which we all agree with you. And the fact that, um, that trade-ready supply chains, it's by design. And for all of us who are here, you need to note that it's by design and not only compliance, no, not by compliance. And you've been able to provide to us the strategic configurations and how we could be able to design export control systems and what will make Africa firms what they must watch out for. Thank you very much, Dr. Madu. We now have our second speaker, esteemed Dr. Albert Njamen. Colleagues, ladies and gentlemen, Dr. Albert Njamen is indeed a seasoned expert in supply chain management, procurement logistics with over 30 years of international experience. He has led and optimized procurement and logistics strategies for global institutions, including the World Bank. He is indeed a trusted consultant in procurement innovation, strategic sourcing, and transport optimization, as well as the fact that he's been leading high-level transformative, impactful project, including capacity building programs across the continent, strengthening institutions and corporate supply chain systems. He serves as the president and fellow member of the Chartered Institute of Logistics and Transport, SILT Cameroon, and an honorary president of the Cameroon Association of Supply Chain, Logistics, and Procurement Experts. He is also a recipient of multiple recognitions, including the Supply Chain Excellence Award. Dr. Njamen is a sought-after keynote speaker on global supply chain transformation and procurement reforms. Jocelyn, you can stop sharing.
Jocelyn. Okay. Is it okay?
Yes, just put in the presentation mode.
I hope you can see my screen.
Is it okay?
Yes, it's okay now. Thank you.
Yes. Yes, Dr. Njamen, you can go on now.
Yeah, I'm coming, please.
Okay.
Okay, we are going to talk. Thank you very much, Professor Tambe, and thank you for all the viewers. Thank you for the opportunity given to me to speak at this webinar. We are going to talk about the governance architecture for export control and sanction compliance. So I will limit myself on this topic because according to what we discussed before during the preparation, to be very brief. I will not come back on what Dr. Obiora has already explained. So according to the statistics, we have about $1.4 trillion global trade penalty were paid from 2019 to 2024. Please come back to the first slide, please. Yeah, and then 78% of firms lack formal export compliance. So these are the reasons that you have all these penalties. The next slide, please. So why trade compliance matters for Africa? Let us see, first of all, the global
context, we have about 1.4 trillion between 2019 and 2024 were paid because of lack of intensification of enforcement of regulation for export control and sanction regime. And 70% of FAME lack global compliance programs. So the key regimes that are regulating the governance of exchange in the world are the IAT, ITA, OFAC, and United European Union Regulation of 2021 to slot 821 now have direct international extraterritorial reach into African supply chain, including all mining and agro industry corridor. So the African free trade created about $3 intercontinental market, but rules and origin of compliance, CEMAC regulation, dual use control require a very robust governance architecture. Next slide, please. So we are going to design now the internal control system for trade compliance. At the first level, we have the policy framework.
Sorry, Dr. Njamen, sorry for interjecting. Jocelyn, just make sure that the slides are moving. I think from my side, I have white trade compliance matter for Africa. I'm still on that slide.
Please, can Jocelyn allow me to...
Jocelyn, can you stop and allow Dr. Njamen to share, please?
Yes, I can allow him to share. Yes.
Yes, you can just stop from your side.
Yeah,
Is it
Dr.
okay?
Njamen, I think you're sharing your screen now.
It's okay, huh?
Yes, it's okay.
Okay. We are going to equip practitioners to build audit-ready compliance system adapted to the African business reality. Okay, now, designing internal control system for trade compliance, the first step is the policy framework. And at this step, we have to draw the standard operating practice, the code of conduct, and trade compliance manual. The code of conduct is the behavior, the manual explaining the behavior of the personnel, and the trade compliance manual is talking about all the ethical rules to apply. Now, the second step is the screening system. You have to adopt the automated entity for the screening, the OFAC, AU, and UN rules. And then we go into the classification. Is designing the specification, the type of specification of product and articles and anything that you have to buy using the ECCN, ITA mapping. So then after that, you go into the due diligence. At this level, you have to apply the KYC, know your customer, the end user certification. So check whether all the people with whom you are trading, they have the correct certification. And then you go into red flag review. At this level, you have to see if they have been already sanctioned and all. After that, you go on the audit trail. That's a document retention and incident reporting. That means report all the incident that you have faced during your transaction. Next slide. So for the sanction enforcement figures, you have to notice that BNP Paribas was already sanctioned by OFAC to pay about $4 billion of fine because of compliance. This shows that it's very serious. No matter how big you are, no matter how strong you are exposed if you are playing with the transaction. So after that, in 2024, more than 850 Russian companies were sanctioned also. You know all what happened. And there's a big problem between the trade with this Russian company today because of this currency transaction. So when you have a problem, in your company, when you discover that there's an irregularity, you need to report within 72 hours under OFAC SDN match. If not, you can be faced to pay some fine. You can pay some fine. So now it has been noticed that 40% of company have supply chain exposure due to the lack of observing the compliance law by the third-party vendors. So now, not only the big company are facing the problem of compliance, but also the third-party vendors with whom most African companies are really dealing with. Especially in Central Africa, West Africa, you need to check if your vendors are really compliant with the international rules. Having basic standard operation, and then doing manual screening of compliance. At the level 3, you have the defined level. 27% of company have documented internal control system and partial automation. And at the level 4, you have 14% who have metric track and audit ready. Most at this level, you have all these corporate company, multinational and others. Then the last level is only 6% who are AI-enabled continuous and who have continuous improvement system to follow and track their compliance and trade. So we are going to watch now the 3-level governance model. At the first level, first line, you have business operation. So at this level, people who are working at this level must know all the compliance, the transaction, know the compliance at the transaction level, know the screening operation, and all the classification we talked about earlier. At the second line, you have the compliance function. So people must have to master the tactical operation. That means policy, oversight, monitoring, and what type of sanctions are being applicable. At the third line, you have the internal audit. Most of the company have to apply it. Independent internal audit to find out at which level of compliance the company is operating. So the metric that are available show that 97% of company are having enforcement action seated in inadequate oversight. So when you are not applying all this compliance, you may face to pay about 3.4 times the fine higher. And then 52% of whistleblower case linked to sanction or export control violation. And then also, to avoid all these problems, you have to implement the ISO 373101 compliance management system. This is the standard for the compliance, and this is one of the standards we are using to train our first supply chain auditor in Global Dominion Institute here. We have launched this certification, and the certification is based on this ISO 37301. So how can we integrate governance in procurement? So the first, you have to see now in the procurement processors, you have to apply, in the procurement cycle, you have to apply also compliance. These are the first five level, at the five level of the procurement cycle, we have the need identification, that's the first level, then sourcing, contract award, and then import, export, and payment. At the first level, you have to do a dual use check. At the second level, you have to screen the vendor to see do a vendor check if they are in compliance, if they are in accordance with the international rules. Then during the contract award also, you have to check all the compliance courses. And during import-export level, you have to check the license and see all the classification of the article that you are buying. And then before the payment, because of money laundering, you have to check also and find out if the company are not falling under that rule. Now, the key global regulatory regime to integrate in your system is the EITA, Dual Use Goods Defense Article Export Licensing. Then the EU regulation, the Dual Use Export Control Brokering, Transit, the FCPA, UK bribery, anti-corruption in procurement and trade, the OFAC SDN, is the sanction list screening by the US Treasury, and then the UN resolution also lists some arms embargoes on Iran-Russia measure, and then you have the ESG multilateral sustainable sourcing and environmental compliance. Now, what are the key takeaways? At the first level, the internal control system must be formal and documented and audit ready. At the second level, you have to monitor the sanction risk, and that needs automated screening with well-operating standard operation procedure. At the level 3, you need a maturity level determine enforcement vulnerability. At level 4, a 3-line model ensure ethical and independent accountability. At the last stage now, the procurement is a compliance gateway, not just a cost center. I can just say, for the conclusion, that compliance is not a cost center, it is the infrastructure of sustainable trade. Now, we have some cases of trade compliance in West Africa and Central Africa. In Cameroon, in the oil and gas sector, we have some company, Dangote, Neptune, operating in Cameroon. They must screen their vendor against this OFAC, SDN, and EU consolidated list, especially for equipment with dual use potential. Now, the key lesson that we can take is that KYC plus end user certification require at procurement stage CEMAC origin. Documentation must align with the FCTA rules of origin to avoid border delays. This is one of the GDI lessons that we are implementing. We are giving to during our training of supply chain auditors. In Nigeria, in the banking sector, Nigerian banks face FATF grey list pressure and OFAC correspondent banking scrutiny in 2023. A major Lagos-based bank was flagged for processing payment linked to a Russian SDN entity via a West African intermediary. So third-party vendor risk demand a real-time API screening. OFAC 50% ownership rule must apply to beneficial owner across the Gulf of Guinea corridor. So in this DRC also, we have some conflict with Cobalt and Cotan that face US CSDD due diligence requirement and US Dodd-Frank section, and non-compliance supply chain risk of European market exclusion from 2026. So finally, here in Global Dominion Institute in Cameroon, we can help company, importers and exporters who want to deal with Cameroonian or Central African company to make their business proper by helping them to set the standard of compliance. So for the future, the route ahead is step one. You have to assess, diagnose your maturity level, use this 5-level maturity that we talk about to see which one you are. We can help you to do it by an audit. The step 2 is to build the internal control system. And then the step 3 is to train and certify your team. Thank you very much.
Thank you very much, Dr. Njamen. Colleagues, you agree with us the level of expertise that we have here. I think on high level, he has provided with us trade compliance architecture. He was able to clearly articulate the keynote that you're going to take out of this session. He provided us with practical guidelines for designing internal control systems for trade compliance. He also provided us with a 4-step sanction for risk mitigation protocol. He gave us a 5-level trade compliance maturity model, and he also provided us with a 3-line governance model, which we can be able to employ. So thank you very much. We now welcome our next expert and keynote or speaker, Danilo Desiderio. Is the founder and CEO of Desiderio Consultant and World Bank Senior Customs and Trade Expert. For many of us that are on social media, LinkedIn, you attest the level and of which work that is being done by Danilo, articulating high impact issues on trade compliance in the continent. Indeed, he is an expert in custom trade and transport policies, with a focus in Africa. He began his career in 2003 as a custom attorney advising government agencies and business associations in the EU and the United States. And after serving at the Italian Ministry of Trade, he founded the Desiderio Consultants Limited in Nairobi in 2019, supporting government regional bodies in implementing trade and customs reform. Since August 2024, he has been a senior associate at the HESPI in Kenya and also worked as a consultant for the World Bank. He is the author of 7 books and over 100 publications on custom and international trade published in academic journals, magazines, and newspapers in Italy, Kenya, Poland, Australia, South Korea, South Africa, and the United States. And over the years, Danilo has been working to projects with many international organizations and multilateral banks, such as the United Nations, Economic Commissions for Africa, World Bank, African Development Bank, European Commission, USAID, BIZ, expertise grants, covering from time to time the roles of trade and transport facilitation experts. He will be sharing to a high level and will be giving us something to take away from these discussions. Colleagues, ladies and gentlemen, let us welcome our esteemed speaker, Danilo. Danilo, over to you. Thank you.
Thank you. Thank you very much, Professor Amber, for this very generous presentation. And thank you to all the participants to this important workshop, which is very timely because we live in a world of where disruptions became the norm and geopolitical tension are shaping every decision, both in the public and the private sector. So before starting, and let me share my screen in the meantime. So before starting, I want to apologize for three things. The first one is that I will repeat some concepts that have been already illustrated by Dr. Obiora and Dr. Njamen, but I will try to put them in practice by illustrating some cases of application by both the private and the public sector. The second apologize is because I'm having some, we are having some power breaks in my area, so it happens that the connection drops. I apologize in advance. The third one, actually, I'm just back from another webinar where someone was questioning the fact because he saw the picture, my picture on a LinkedIn post. He was questioning I was the same because he said, but you have a low grade, you are not the one in the picture. So I want to reassure everybody that I'm the one. Probably I was particularly stressed in that period. So that said, just a second. Sorry, I will not look at the camera here because I have a very small screen, so I am using another laptop for reading the slides. So my presentation will focus basically on two concepts, trade readiness and trade resilience. So these two concepts have already been described by my colleagues, but I want to summarize. Trade readiness basically is refers to the ability to move goods across border efficiently and effectively. Trade resilience, on the other hand, is the capacity of guaranteeing the continuity of operation in the face of disruption. The key point is that trade readiness is not something that is separate from trade resilience. It's one of its key enablers. Also, I don't know why I can't, okay, now I can change the slide. So, also another key point, when we speak about supply chain resilience, we should move beyond the simplistic idea of stockpiling goods. Resilience is a dynamic process. It's the ability to anticipate risk, adapt quickly to changing conditions, and ensure that trade continues to flow, even if some unexpected events happen. So disruption can come from a different direction. Disruption to supply chain can come from geopolitical tension, from conflict, from regulatory changes, from tariff shift. We were talking before about the trade policies of the United States. Transport bottlenecks, supply failures, and also sudden market shocks. All these risks nowadays, they are becoming more frequent and always more interconnected. I give you an example to understand better this point. Many of you will remember that in 2021, there was the blockage of the Suez Canal. In that period, many container ships in the Red Sea and in East Africa were blocked beyond the free storage periods with costs that were escalating rapidly. What started as a localized disruption in Suez became quickly a phenomenon that cascaded across all supply chain, causing cost increases that in some cases also threatened the profitability of some business. Now, the same was, as Dr. Obiora was mentioning, the same is happening now with this disruption that are happening in the Strait of Hormuz. The conflict has already caused a sharp rise in air freight cost to the Middle East. And currently the rates have jumped from 3 weeks ago, they were at around $1, $1.50 per kg for air transport. Now they are already at $3 to $3.50 per kg. As a result, several companies are with strong export links to these markets in the Middle East are operating at less than their expected volume. Despite this should be a peak period, demand for some products, especially perishable product like meat, for instance, which is highly demanded during the Ramadan period. So there is a strong demand in the Middle East, but the shipment from East Africa, they are decreasing. Actually, probably someone has noted that there was an article published by Reuters last week. They were commenting that some abattoirs in Kenya specifically, but also in other East African countries have experienced workforce reduction up to 80%. And some exporters reported that because of this closure of shipping routes, they had problems to ensure the freshness and the quality of their perishable good exports. So this example underscores how it is important to develop resilient trade corridors and supply chain, especially for perishable products. Now, this is where coordination between public and private actors become extremely critical. Looking at this slide, you will see ports, customs, shipping lines, and traders must share information and act in sync with each other. Without this alignment, even a well-prepared business will struggle to respond effectively. In recent years, disruption like COVID-19, geopolitical tension, and we have assisted many, especially in the last 3 years, have shown that the trade compliance is not longer a bureaucratic obligation, it's a shared strategic capability. For business in particular, it accelerates operations and prevents costly interruption. For governments, because there is also an impact for governments, it ensures that essential goods flow smoothly while authorities can focus their control on high-risk shipments. In short, a trade-ready supply chain is basically means moving from a reactive stance to a proactive one, anticipating disruption, mitigating risks early, and turning compliance into a source of competitive advantage. In practice, this readiness is built on 2 main core pillars: strong governance, which was already mentioned by Dr. Njamen, and real-time, I would call it operational intelligence, which are both held together by a critical enabler, which is effective public-private collaboration. Let's see a few examples. Governance, in short, means planned and proactive risk management. Let's see, for instance, the case of the export of oil from the Gulf. Most of oil producers, you are aware, in this region, now they ship oil via ship tankers through the Strait of Hormuz. But during this period, this route became extremely risky, as you are all aware. That's why most of these producers, like Saudi Arabia and the Emirates, developed some alternative routes. Saudi Arabia, for instance, developed, not now, many years back, the East-West pipeline to move crude to the Red Sea port of Yanbu, which is on the Red Sea coast in the west part of the country, to address these cases of disruption. Emirates, they did the same. They developed a pipeline that connects their territory to Fujairah, and that allows tankers to load outside the Hormuz Strait. In addition, now both countries that are using fuel tankers fleet to move oil through land corridors. Now, these cases, what they explain, they illustrate how governance is planned and proactive is about proactive risk management. Pipelines, export terminals, truck fleets are all mitigation measures that ensure continuity of supply, especially when choke points are threatened, despite none of these measures can match the scale and the efficiency of maritime transport. I would like to remember that very large crude carriers, VLCC, these big ships transporting oil, can transport up to 2 million barrels of oil over very long distances. Now, let's see how the governments react against these challenges. Kenya, for instance, is a fuel-dependent country, has contracts with Saudi Arabia and Emirates. And thanks to these mitigation measures adopted by the government, fuel can arrive to the country with a limited disruption. Despite this, the shipping costs are rising because of higher transport costs. You know, the distance now is longer because the ships, the petrol must be transported by using a different mode of transport along longer routes, but also there are insurance premiums for maritime transport that have gone up. So the government is mitigating through maintaining strategic stocks of oil and monitoring global development, ready to implement some contingency plans. Just to give you an example, for instance, diversifying suppliers or rationing fuel stocks temporarily. You see in the slide, there is also an example referred to Ethiopia. Ethiopia is doing the same, but with an additional measure. They are maintaining some fuel subsidies to continuing to sell petrol and diesel to prices below the international market level. The reason is that the government wants to prevent a sharp increase in fuel prices that can accelerate inflation and potentially cause social unrest in the country. Morocco is another example of a country that addressed the logistical challenges through a port community system called the PortNet. This is a digital platform that links ports, customs, logistic operators and traders, including banks and insurance, to a digital platform. So the companies, basically, they submit trade documents electronically to this platform, and authorities monitor the trade flows in real time. By improving the transparency of trade operation and the coordination between the various stakeholders, this platform has strengthened the supply chain reliability, making trade more predictable, even in volatile global conditions like the present one. Djibouti, on the other side of the continent, has put in place a similar mechanism that is also a port community system. So operational intelligence is the other key pillar I was mentioning, and this is about using real-time data to keep supply chain running smoothly and resiliently. It means basically to detect potential disruption before they escalate, evaluating their impact on the supply chain, and preparing some kind of countermeasures in order to mitigate them. This capability is critical not only for business, but also for government. I give you an example of application for businesses. Probably many of you know platforms like Freightos. So Freightos is basically a supply chain management tool. So there are many others. It's just an example. It's a platform that allows companies to track shipment in real time and receive alerts if there is any delay in the shipment. Integrated system monitor supply performance and the documentation compliance, give firms the information necessary to act immediately, and they allow companies to plan rerouting of shipments, finding alternative suppliers, or adjusting inventory. So Freightos is one of these platforms that allows this. Now there is also the use of AI platforms, because the modern AI artificial intelligence tools go even beyond, because they allow business to map extended supplier networks like tier 2 or tier 3 suppliers. Tier 2 means supplier of your supplier. Tier 3 means the supplier of the supplier of your supplier. So The AI allows to monitor all the layers in the supply chain, flagging risk for that arise from export sanction, regulatory changes, or downstream supplier disruption. Another example applied in logistics are the so-called e-logistic platform. Probably many of you are aware of these apps or web platform that allow the matchmaking of demand and offer of transport offer. So you probably have heard about Kobo 360, Time Plus, or Lorry system. This platform, what they do, basically, they connect shippers with available carriers. Whether it's a pallet or a truckload or a containers, this system identifies carriers that are nearby to the cargo. They calculate the fees. They confirm the pickup and delivery and provide the GPS tracking. So this platform, which are designed as a Uber-like apps, help reducing empty trips, which are really a huge challenge in Africa, and they ensure the goods move faster, improving the efficiency of transport network. So we have seen the application of the operational intelligence in the private sector. The phase of application in the public sector, in the government, is the risk assessment methodology used by customs to accelerate trade and improve control and enforcement activities. Nowadays, customs, even in Africa, in most African countries, they use risk profiling technologies and AI-based screening technology with inspection. What they do? They analyze the documentation provided by traders, for instance, in the custom declaration or transport of banking documents, and they they develop a risk profile of the operation, flagging suspicious consignment. In case the shipment is flagged as at risk, customs, they conduct a physical inspection. In the other cases, they just conduct a documentary or inspection or no inspection at all. So let me conclude by saying that all the examples that I gave demonstrate that the resilience is an engineered process through foresight, planning, and the intelligent use of information. Trade-ready supply chain basically anticipate disruption before they happen. This is the essence. They respond quickly when conditions they change. They maintain continuing even under pressure, whether the shock comes from geopolitical tension, regulatory changes, or other causes. For governments, this means to secure the inflow of goods, especially essential goods like fuel and food, for instance, stabilize market, and also protect citizens against this interruption in supply chains. For business, is a source of a competitive advantage, therefore, to move faster, to adapt smarter, and also to sustain trust with the regulators, partners, and the customers. In this context, planned and proactive risk management, in the case of, I was using the term governance before, the governance becomes the function that ensures and strengthens the trade readiness, while data and the digital tools, which I call the operational intelligence, serve as joint enablers, while public-private collaboration forms the foundation of a resilient supply chain. In a world where uncertainty became nowadays the only constant, those we will succeed, and this is my final conclusion, are those that can spot risks early, they can act on them quickly, and can build strong partnership across all the supply chain and with government to keep goods moving and stay resilient every time a disruption hits. Thank you.
Thank you very much, Danilo. Colleagues, we all agree it was an interesting session. all our speakers providing unique perspective and insight. I think from Danilo, what you concluded in I like it, in a world of constant disruption, winners are those who build ecosystem, not just supply chains. So thank you very much. You've been able to articulate clearly, giving us practical examples, how we could be able to manage it from a business and government perspective, and the fact that resilience needs to be engineered.